Greetings, Zimbabwe, Africa, and the world. Welcome to In Conversation with Trevor, brought to you by Titan Law. I go beyond the headlines and beyond the sensational. Today, I'm in conversation with BancABC Zimbabwe Chief Executive Officer, Dr. Lance Shingai Mambondiani. Enjoy this quality conversation. Dr. Lance Shingai Mambondiani, I love these middle names I keep on telling people. Thank you so much for creating the time to join me on In Conversation with Trevor.
No, thank you so much for having me. I feel so undeserving. Look, such an incredible platform, and you guys have been doing a really, really fantastic job.
Thanks, Lance. Let me start with the way you carry yourself as a banker. You are not the traditional stuffy banker. Look at you. Look at you.
I'm wearing Mickey Mouse
you
socks.
know, Mickey Mouse socks and that kind of stuff. Is this deliberate?
I don't know. I wouldn't say that it's deliberate. I think that's just who I am personally. And I always say that I'm an accidental banker. I'm not trained as a banker initially. I actually trained as a lawyer. Some of your viewers might not know. So I studied law and was taken through law school by people like Welshman Ngube, actually. I love more my Doku with some of my lecturers in college. So I went into banking almost as an outsider, and it's simply because I was passionate about looking at banking a little bit differently. Of course, I kind of made my transition from law into banking through NMB. So I was trained into banking by James Mushore. Actually, I know James Mushore was one of your guests on this show. Yes. Really, really exciting. So I went in as what we call a legal advisor, working with Tawanda Nyambrai. Actually,
The best in the market.
Absolutely. In corporate finance at NMB. So it was good training ground, but still I was an outsider. I was a lawyer who became a banker. So I wouldn't say that I'm a consummate banker. So who best to disrupt the banking than somebody coming from the outside?
Exactly.
Like an outsider.
Yeah, and how has been the journey like? I mean, the transitioning from I'm going to be a lawyer and then suddenly you're the accidental CEO of a bank.
You know what, I think that the transition was extremely brutal and very, very difficult. I remember that I made many, many mistakes through my journey. After NMB, worked with Nigel Chanakira. In fact, Nigel Chanakira is the one who got me from NMB, asked me to be MD of an outfit that he called Kingdom Private Bank then. I was very, very young, made a lot of mistakes. And I always say, I did make a little bit of a blog that I was fired by Nigel Chanakira, actually, because some of the mistakes that I...
Did he fire you?
He did. He did
fired you.
He fired me. Well, it was some kind of consensual.
Let's go separate ways.
Let's go separate ways, because I'd made quite a number of mistakes there. And I realized I needed to grow. Left, then went to the UK and decided to beef up on my experience, because some of the mistakes I've made were mistakes of youth, exuberance, because I was extremely aggressive, and also because I wanted to do things so quickly, so fast, and perhaps because some of my ideas were a little bit radical and just a little bit more ahead of their time, I would say. So went to the UK and started from the bottom. Started looking at banking in Zimbabwe. I've been researching banking in the UK, I think, for close to 6-7 years, until I came back to Zimbabwe, and I thought that I was ready.
And talk to me about the mistakes that part of some of the mistakes that you made. For instance, the ones that you talk about that made you and Nigel part ways. Do you remember what these mistakes were all about?
No, I can't remember. I think some of them really were just, when you are a banker, you have to follow all sorts of rules and procedures. And that is absolutely important, because you are protecting depositors' funds. But ultimately, because you are a regulated institution, you need to make sure that you're crossing your T's at the time. And I would say that the mistakes I made were mistakes of youth. All of us make those mistakes. I think I'm better for it because I knew what I should and what shouldn't do in a particular instance. And then also because I had a fierce determination then of correcting what I had done wrong. I think what I probably lacked in experience, I overcompensated in study because I wanted to make sure that I kind of bulk up and become a better banker at it. And if I had not had those early experiences, I don't think that I would have been the person that I am today. And I think that those mistakes absolutely made me.
So TM Asset Bank, TN Asset Management, Kingdom, and then NMB, and then you find yourself in Investec and Coronation too. Talk to me about that experience.
Absolutely. So when I was in the UK, I first went in under a British scholarship that's called Chevening. Proud Chevening scholar. So I had a bit of the fortune of being relocated to the UK by the Chevening scholarship. Went to Manchester. I actually spent about 11 years of my life in Manchester. Incredible time. My life. Of course, I am a consummate Manchester United supporter.
Oh dear.
It goes without saying.
Yeah. But you're talking to an Arsenal fan, so you might just be kicked out of this thing.
I'm so sorry. Commiserations to you. Perennial underachievement.
Yeah.
But I lived in Manchester for about 11 years. As part of that process, I did my master's. In development finance. Whilst I was doing that, I realized I wanted to have experience in banking in the UK. So I was invited again to be a part of a unit that was called Coronation Financial in the UK. Spent a couple of years.
So this is Coronation UK.
Yes,
not South African Coronation.
No, there's no connection.
Yeah.
So spent a bit of time doing investment banking, and also really looking at some of the investment opportunities that existed, particularly in the sub-Saharan Africa and also in Europe. So that was really an incredible experience for me, in that I had the opportunity of looking what was happening in the UK market, but still using my experience in the UK. And of course, I did a couple of stints with Barclaycard as well, which and because I wanted that retail banking experience, managed the cards department for a few years, and went to Ulster Bank as well in Ireland. And all these things here were just really little attachments, because what I wanted to do was to get as much experience as I can in the banking sector. So I must say my experience in the UK taught me a lot in exposure, in how to do things differently, and in just how we can assist a banking sector to become stable, and also to transcend all sorts of financial crises that were happening at the time.
So when did you become comfortable with banking and not being a lawyer?
I would say when I was at NMB. Back then, I knew exactly that I wanted to make the transition.
Fascinating, isn't it?
And I can tell you why. And I think most of us are very impressionable. I was young, I was impressionable.
Yeah.
Remember at the time, Trevor, that's when we had banking really very fashionable. And there were all these flashy treasurers who were walking around with all sorts of cars that we never heard of. And look, I was coming from Costa Mazonga, which is Zamchia Costa then, because that was my first job. And I used to walk to Rotenro with my clients driving the car. I didn't have a car then, but I was the one who was representing some of my clients in Rotenro. So it pained me a lot that the lawyer is the one walking to Rotenro. And so one of my clients, I remember this fondly, when one of my clients saying to me, "How are you going to get there? Can we give you a ride?" And I said, no, don't worry, don't worry, I'll get there myself. And of course, we had a little bit of an allowance to get Rixie taxis then.
Yes.
But I had to pocket it because I wanted to use the money for something else. And I walked from Zamchia Costa, which is Old Reserve Bank building, right down to Rotenro because I wanted to save a little bit of money. I got there sweaty, by the way.
But with the money in the pocket.
With the money in the pocket. But that's when I realized that I wanted to, and when I got into NMB, I realized I wanted to make the transition. I was young, I was aggressive. I didn't want to make my money when I was old and gray. I wanted to make sure that I am part of whatever I was seeing. And like I'm saying, we were young, we were impressionable, and we also saw that banks were doing so well. And I just wanted to add, Trevor, that during that period, probably one of our most proud moments, and as far as I'm concerned, in indigenization. Because at the time we had a lot of indigenous banks that did so well. In William Nyemba at Trust Bank, we had Julius Makoni, James Mushore at NMBZ, and then we had all sorts of units that were coming up. That's when we had what was it? Well, TrustFin was part of Trust, and we had all sorts of indigenous banks that were coming up all at the same time, and it made us proud. I think that era, in as far as indigenization in this country, is probably one of our golden eras, because we also had the Shingi Mutasas at Zimnet, then now an incredible conglomerate, and I believe that was the genesis of something that was really, really special.
And then you did a PhD where you were looking, your thesis, your dissertation, is it a thesis? What is it called, by the way?
A thesis, yeah.
Your thesis.
Well, thesis, potato, right? Yeah.
You're looking at Zimbabwean banking and that so forth. You just, in a nutshell, what were the salient points of your thesis?
So what I wanted to analyze was the relationship between indigenous ownership of banks and profitability, and also some of the crises that we had during that period, 1997. I think if you remember, during that period we had a near systemic bank failure. We had about 10 banks or so failing, starting with Workers Bank, right up to the failure of a Trust Bank, which was probably what we call then too big to fail, because Trust Bank was huge. An incredibly
impressive.
Huge. It was very, very impressive, and also had grown far too quickly. We had Royal Bank as well at the same time, Genesis. We had quite a number of banks that had come up, and some of them owner managed. So what I was analyzing was the circumstances under which they failed, and also the circumstances of ownership that makes banks profitable. So I spent 5 years of my life.
What lessons do we get from that? I mean, clearly after this, a lot of people want to get hold of the thesis.
And one was a lot of corporate governance failures that we had with owner-managed institutions at the time, and also that it doesn't matter the ownership type. You can still be a successful business as long as you're structured right. So institutional capabilities were, I think, systemically lacking in some of the financial institutions that I studied. And I think looking at the way that the banks were set up, and also the fact that banks coming up at the time were beneficiaries of financial liberalization. If you remember, we were coming out of ISAP, and out of that, then we had weak regulation at the time. We also had the contribution, 1 weak regulation, 1 owner management, 3 greed. So we also had quite a lot of people whose banks failed because of greed. So how do you curb that? How do you protect depositors' funds? And how do you strengthen an institution by putting together the capabilities and also the institutional framework that protects not only you as an owner, but your stakeholders, your depositors, and the regulator, and all the other people that are absolutely important in contributing to the strength of the banking sector. And one of the things that I'm finding as well that I was very, very passionate about, that I pulled out, was the health of a financial institution in any country. It's actually directly related to the economic growth of an economy. And I think the struggle that we had in the banking sector at the time actually reflects in the downhill or the trend that we saw in the economy in the beginning of the new century.
So we've now come right. The pendulum is swung as far as regulation.
We're now on the other side.
Extreme. We are on the other side. We are now sitting on statutory instrument 127, which I would want down the line for you to explain to us its impact. But there we are, Lance, right now. Talk to me about regulation right now, given what you've already outlined. Is this too much regulation? Is this heavy-handed? What's your take?
I believe without, and I'm not a regulator, I'm an observer, I'm a player in a regulated industry. And I can tell you that we came from a point, like you said, where we were probably extremely poorly regulated into an era now where you might say that there is some sort of good regulation that has stabilized the financial sector. And don't get me wrong, I think in the past 10, 15 years, we've experienced some sort of financial sector stability, and that is good for the economy. Then we have a period where we've transitioned into some sort of economic stability. And every actor, particularly those who are regulators, when they see some sort of stability, the temptation is to tighten the screw a little and not address the fundamental issues that has caused that instability. And you tend to see that not only in Zimbabwe, but in many other nations. And I believe that once we start to address the fundamental reasons why our economy is maybe not dysfunctional, but it's in a way where it is not necessarily properly suited for what we do. I don't think we will do a lot more than we are doing right now. I don't believe that overregulation is the answer. I believe that engagement is the key. And I also believe that good policy and policy consistency is probably more important than regulation, in my view.
You know, as you talk about you know, Boca and others and the throwback, you remind me of my entry into the industry as a reporter covering the money market. Do you remember something called the money market?
I absolutely remember it.
We used to have what was called the money market. So you've been in the industry for some time. Here is the stuff that I was recollecting as I was researching. The money market. Discount companies, you remember?
And making money makes sense.
Yes,
I
absolutely.
think Nigel had a show like that.
The money market, building societies.
Absolutely.
BAs, bankers' acceptances, and TBs, and discount companies. Do you remember discount companies?
Absolutely.
And
DCZ was one of them, discount companies.
Exactly. And building societies.
Yeah.
Don't you miss those good old days?
Trevor, that is the sign of a functional economy. And I say this with regret that where you do not have a culture of saving in a country, you're not going to spur economic growth as fast as we would want it to be. And building societies assist us to really intermediate in the building market. Car lease financing, as you walk into South Africa, into other functional economies, you'd see that as long as you do not have savings, you tend to have a gap that is filled by what I would call short-term financial arrangements and schemes.
Speculation.
And I want to say this controversially, but also because I believe in it. The development of mobile money in a country is usually inversely related, and I always like to throw this. It is inversely related to the development of the economy in that country. So you tend to see that mobile money is short-term money that is intermittent. You can't do much with mobile money, but mobile money is serving a purpose. It's because the banks at a period of time were dysfunctional, where didn't have the confidence of a lot of people. So you tend to have people gravitating to something that they believe is short-term, something that they have trust in, but that doesn't help in building a country or an economy, because I can't play my role as a financial intermediator. So I can't lend money that is sitting on a wallet. Why? Because that money is on its way to go to your Mbuya somewhere, so that she can buy whatever she's going to buy. So I can't give you lease finance. I can't give you mortgage finance, and that's how you kill an economy. In that we the most important thing that we need to build is actually confidence. Once you have confidence in the financial sector, you and I have the confidence of putting our money away for a year and I give you a return for it. When you put your money away for a year, that's how you see cranes coming up, because I am going to give company A, company B money for a year, money for 2 years, because you've given me money for a year. So in the absence of that confidence, and as long as we do not have an arrangement in which we are building long-term capital, in the absence of foreign direct investment, it's very difficult for us to build a strong economy that is actually building something and not necessarily transitory in nature.
You've just gone exactly where I wanted us to go, which is, with all that taken away from you as the manager of wealth, being able to oil the wheels of the economy, your effectiveness as bankers has been severely reduced in this current environment, not to mention the other economic challenges. Talk to me about being a banker in this kind of environment.
It's probably the most difficult time to be a banker at a time. And the reason I say so is that bankers do not make policy. And bankers are simply a reflection of the economic realities of a country. So I'll take you back to the time when we had cash shortages. When we had cash shortages, people thought that banks were holding on to cash. Like, okay, so
where's my money?
Where's my money? But I don't print money. Banks do not print money. So if you're not printing money, you are giving money based on the policies that exist in the country. But we tend to reflect the let me say the either efficiencies or inefficiencies of the economy that we operate in, because we operate within a policy. So sometimes people take their frustration on the bank because they believe, because it is the manifestation of something that is probably outward to us. So when you come to a bank, sometimes you believe that the bank is the reason for your suffering. Yes, we could be the reason for the suffering because we are also trying to adjust to a policy that is there. If there is anything that we have to collectively do as a sector, I believe it is, like I said before, improving confidence of the person who is leaving their money with us. I think confidence within the banking sector is something that has improved tremendously in the last couple of years, but it's something that we all have to do collectively, whether it's us as actors, as bankers, whether it's the policymakers, the government, and all the players that they have to work so hard to build investor confidence. If we don't have that investor confidence, we are always going to have this back and forth with the investor, with the person who is depositing their money, and then also the conflict really with regulators, because regulators believe that banks are either increasing charges, they are doing something, or that they are playing games with people's resources. And I believe that we all collectively have a job to do.
When we started, I spoke about you as a person in terms of how you conduct yourself. The lady who just did your makeup says to me, you can see his fingerprints at Stewart Bank, and he's doing the same thing at BancABC. Talk to me about, so Econet gets you when they acquire Stewart Bank, and they say try and reverse technology into banking. I'm sure there's a term for that. And then you get to do that. Talk to me about how you do that and how it ends up looking like.
No, and I always say that my experience within the Econet Group was probably one of my best corporate experiences, bar none. And I wouldn't compare that to any. And I think that Mr. Masiwa is an incredibly sharp business leader. We've done so well in identifying opportunities and actually just turning some models around on their head. So I get into Econet. As you know, Econet, largest mobile operator in the country, 11 million subscribers, whatever, 8 million subscribers, whatever they are right now. They own a bank, right? And one of the things that excited me when I was coming from the UK to join the Econet Group was the chance of doing an integration between a bank and a telco. And the only way you can do so is if you're going to increase digitization. So you try and digitize as much as possible. And that was my mission. That was my assignment from Ms. Masiwa, that try as much as possible to integrate telecom the telecom business into the bank, and that is what we set to do, which is to digitize almost everything, create a bank that is accessible to anybody and everybody, no matter where they are. And I think if you saw some of the work that we were doing, we were extremely aggressive almost everywhere in trying to bring the bank to the people. And our philosophy was that if there are 7-8 million subscribers on the Econet platform, why can't those 7 or 8 million subscribers
account holders?
Be account holders at Stewart Bank. That's why we were opening bank accounts on the mobile platform. That's why we were offering agency banking, and that's why we were digitizing as much of the platform as possible so that we are fitting them or integrating them into the telco.
So you say your experience was perhaps the most rewarding one. Talk to me about one or two things that you picked up there as far as leadership and management is concerned.
I think innovation. I've always been an extremely curious person, but I can tell you the Econet environment is one that is also very, very innovative, very driven, very aggressive, market leadership being another. And I realized one thing, that sometimes we are given opportunities or something that is looking extremely dead. And I don't want to say that the institution I was working for was looking extremely dead. But in leadership, we have an opportunity of changing the narrative of whatever we are asked to lead. And it has always reminded me that whether you are a father, a church leader, or a pastor, a president, or you are a CEO, you have an incredible responsibility actually to pour out your energy and leave that asset a little bit better than you found it. And the one way that you can do so is having self-belief, in actually not being afraid to make mistakes. And that has always been one of my philosophies. I'm not afraid to make mistakes. I'm not afraid to get fired. As long as I'm contributing to change and I believe in it, and as long as I absolutely am passionate about the assignment I'm given, I will do it. I would do it. And also, I believe, Trevor, that it's better, and I was saying this a few days ago, it's actually better, to try something and be wrong than to try nothing and be right. So it's better for you to go through an excruciating experience and walk out on the other side and say, you know what, that was an incredible experience, very risky, and we did some things that I believe were extremely edgy, and some which were unconventional, and some which I'm sure the market was looking and says, what kind of madness is going on here? But if you're going to change convention, you can't change it at the center. You can only change it on the edges. You only have to be mad. You have to look at somebody and say, what exactly is Michael Jackson smoking, right? What exactly is this person doing? That's the only way we change a narrative.
Lance, talk to me about the edgy stuff that you did whilst CEO of Stewart Bank. Was Kwenga one of the crazy stuff?
At some point, I think I was called the Kwenga CEO or something like that. But again, if you go back to the philosophy and some of the things we were trying to do, Kwenga was simply a POS machine that we were trying to bring down to the masses. And again, going back to the philosophy, is we wanted to make banking as simple as possible and as accessible to as many people as possible. It was extremely difficult for people to access the POS device, especially the SMEs who were operating a little stall on the side of the road. So the question that we were asking ourselves is, how can we bring payments down to those people who need them, and not necessarily to the big supermarkets or to the big retailers? And that's how Kwenga was born, because we really just wanted to bring a payment solution to people who are on the grassroots, and people who would appreciate it. And it's incredible to see some of your thought process and some of the things that we have done being well received by the market. And I think that's what innovation is about.
Any other edgy stuff that you did at Stewart Bank?
I think we also did introduce WhatsApp banking, if you remember. For the first time, we allowed people to do banking on WhatsApp. I know that is now ubiquitous. Almost every other bank is doing it now. But at the time, it was groundbreaking, the fact that you could actually do all your payments on WhatsApp. It remains one of the things that we are most proud of.
Fantastic. But then your success became perhaps what the reason for your downfall at Stewart.
Absolutely, absolutely.
With customer acquisition going ahead of infrastructural development. Talk to me about that, the IT infrastructure and so forth.
Again, probably one of my most excruciating moments in leadership, and certainly one of the hardest things I've ever had to go through as a CEO. At the time, we started off as Stewart Bank with, I think, close to about 50,000 customers. By the time I left, we were clocking about 2 million customers. And this, Trevor, was over a period of, I think, a year and a half. But we grew so fast, so quickly within such a period of, such a short period of time, because we were driving so hard. Remember the target we were chasing, 7 million subscribers, right? We wanted everybody to have a bank account. But one of the things that we realized was that the kind of absorption that we were having on customers was probably 5-10 times faster than we could develop our technology to catch up with that kind of absorption that we had uptake in customers actually. So we had system failures. Near catastrophic. I remember, I would wake up sweatless almost every night. I couldn't sleep actually for a number of months because we tried everything and it was just impossible. We had all sorts of issues with the technology.
So clients were not accessing their accounts?
Clients couldn't access their balances, and clients couldn't do transfers in some instances. And then we had to find a solution, right? So we sat with my team and devised this solution of really just literally creating a new core banking system altogether, which is take out all those accounts, put them on a different platform locally, and almost start it afresh. That's how we got out of it. I remember Trevor receiving an email. In fact, I was shown an email that was somebody actually I know who was suggesting that, you know what, this guy has destroyed this institution, not fit to be a CEO. Please replace him tomorrow with some other known person, some non-banker. And this is something that was being said to my shareholder. I was extremely shattered, extremely demoralized. I remember receiving one message, and I'll never forget this. One morning, I just couldn't get out of bed, and I think it was so bad.
Wow! I
just couldn't get out of bed, and we had tried everything to find a solution, and I thought, you know what, I'm gonna get fired again here. This problem is just too humongous. And I received a message from Nigel. It had two words. It said, "Lance, fight." That's all he said. He said that in a message. You know what? I woke up one morning and I decided that, look, this problem is greater, but we need to find a solution to whatever mess we have created. And I sat with my board chairman at the time, and he said to me, one of the things you don't realize is that success is more difficult to maintain than lack of success. And sometimes you can be a downfall of your own success. So you need to manage your success almost 10 times more than you manage your failure or your growth. So we thought growth was the ultimate, but growth is not the ultimate. No, when you grow, you probably need to do 10 times more for you to sustain that growth and also to make sure that you maintain that growth. So we spent day and night looking for a solution until we found it, until we stabilized. So we only started doing innovation and all these fancy things once we had stabilized, because we didn't want to. So remember, this was almost like at the start of my career.
Yeah.
So we thought that the first prize was to stabilize. Once you stabilize, then you go through all these fanciful things of introducing all the innovations that we then started to put out to the market. But boy, I can tell you that.
What did that teach you about yourself?
I thought it taught me a lot of resilience. I dug deeper than I probably have ever done in my entire life. I also learned that mentorship is absolutely important. You just need people who can pick you up at your lowest moment. And I also, it might be a cliche, but failure is not fatal in some instances, and I think you can fail as long as you have the courage, the determination to get up again and fight. I think that is probably something that is characteristic of a lot of successful people, in that you are going to fail, and you're going to fail many, many times. But do you have the courage, do you have the strength to pick yourself up and to do it again? And also really to go after your dreams and something that you passionately believe. Because we passionately believed that we were changing the trajectory of the banking sector in this country. And we did. We were doing so, but in the process of doing so, in the process of a success story, you're going to go through an extremely excruciating
You're going to go through excruciating moments. Talk to me about that moment before that message comes to you, Lance, fight. That sounds like you're in bed. You're not getting up. Talk
Absolutely.
to me about that moment. The darkness there.
In leadership in general, and I don't believe that this is something that is unique to me or to this moment. I believe that in leadership in general, you are going to go through a lot of challenges and a lot of things that I believe are going to beat you down to the ground. And I was certainly demoralized, and I was certainly downbeat. But I can tell you one thing, and perhaps if you had the occasion to see or to interview those who were close to me, when I got out of bed, I was probably the strongest. And I was probably the most confident. And I was probably the one who was, encouraging everybody. But internally, I was shattered. I'll go home and cry. I'll go home and
But you can't show it to the team.
You can't show it to the team because part of leadership, I believe, is to give the other person hope, right? If I can't show my team hope, what hope is there for them, right? So I believe one of the greatest lessons in leadership is the capacity of giving each other hope and to give your team hope, and just the determination and the courage that it can be better. Motivating each other.
Is this where BancABC finds you then?
Way after. Remember, I was at Stuart Bank for about 5 years.
5 years.
And this happened probably much earlier in my career. At BancABC, and I've always said that I wanted to do something different at a 5-year mark. I belong to that school of leadership that believes that you do your job, you do the best that you can, hand over, and then move on to another assignment. And I definitely wanted to move on to something new, to a new assignment. And then that's when I joined BancABC.
And congratulations on the 11 million housing deal
thank you very much.
Shelter Afrique.
Shelter Afrique, yeah.
That must be significant for the bank. What is it going to do for the bank and the clients?
So we are in the process of contributing to the national housing stock. A big backlog in the country, as you know, and as far as housing is concerned. And we are doing a project as we speak in Tynwald, which is our first housing project, which is people don't know much about. And of course, we were discussing with Shelter Afrique 2 facilities. One was for 7 million, the other one was for 4. This, of course, being our second facility that we've negotiated with Shelter Afrique. And our idea is that, as I've said, we are already doing quite a number of other housing projects. And we wanted something that will contribute to that exercise. So we expect that we will collectively, together with our scheme, the Shelter Afrique scheme, we should be able to add about 2,000 to about 3,000 new housing stock based on local funding that we have received, the Shelter Afrique funding, and also some of the pension fund funding that we have received from a number of sectors. So we're very excited about that.
And how do what's the qualification criteria?
So we're still working on the modalities for that. A little bit of early days, but I can tell you that there's a number of stakeholders we are working with, and Minister of National Housing and Social Amenities being the other, because our passion is really to make sure that this funding benefits those who are either in need of low-cost housing or mid-tier housing. So you don't qualify, Trevor. We are not after the Borodale houses or anything like that. So our intention really is that we are providing housing that are at that level, either low-cost housing or somewhere in the middle. That is what is most likely going to be the qualifying criteria.
I know you're passionate about two things: financial inclusion on one side, and techfin and technology
Absolutely.
as far as banking is concerned. What is it that needs to be done, or what is BancABC doing to pump up financial inclusion, as it were? What needs to be done? What instruments, what platforms need to come online? Are you happy with where you are as far as financial inclusion is concerned?
I think more can be done, and I honestly believe that the importance of technology is to address some of the shortcomings that we have in financial inclusion, and I honestly believe that technology in the past 5 years has changed the trajectory not only of the banking sector but of all businesses. Really, it has increased access, it has reduced costs significantly, whether it's media, whether it's music, whether it's banking, transportation, talk about Uber, or even hotels. So there is nothing special about banking, and I one of the philosophies that I hung on to quite a few years ago is Bill Gates' philosophy that banking is necessary but banks are not, right? And what that simply says is that we are moving into a period where service is more important than infrastructure. So it's not important how many hotels you have. It's not important how many wagons you have in National Railways of Zimbabwe. It's actually not important how many branches you have as a bank is concerned. As long as you are using technology to reach as many people as possible at a fraction of the cost of those who do. I believe that that's how we are going to increase financial inclusion, because you have platforms that allow somebody to do a financial transactions without necessarily them visiting the bank. I made the comment a few days ago that Africa is way ahead as far as technology is concerned, and I remember I got a bit of criticism for it, but I believe it. And the reason why I say so is that, if you look at some of the changes that we have seen in Africa, one of the greatest inventions that we have had in Africa is the USSD platform, because the USSD platform allowed us to almost have ubiquitous financial services, whether it's insurance, it's banking, it's transfer, you can send money to your gogo using star something. So in my view, what Africa needs sometimes is not a Lamborghini, right? It's a Toyota 4x4 kind of technology and thinking,
relevant,
something that is relevant to us, and I think that is what I believe that is innovative, when you are able to look for an opportunity, a gap, and addressing financial inclusion because your technology is relevant and your technology is timely for the country that you intend to serve. So I see an immense opportunity. And with some of the work that we're doing at BancABC, just to make sure that we are addressing that gap of those who are underserved, and whether that's in payments, it's in provision of housing, or in whatever else that we are called to do.
Is housing going to be big going forward for you as a BancABC?
It definitely is. Not only housing, but infrastructure development as well. And I want to go back to where we started, which is the role of a bank is financial intermediation. It's not to have money sitting or for us to do transfers as we do. And I think financial intermediation is something that I'm extremely passionate about. The more we do financial intermediation, the more we are going to see the economy grow. And if we are participating in infrastructure development, that's how we leave a legacy for our children.
Absolutely.
For our children.
That's how you grow an economy.
That's how you build something.
Yeah.
Trevor, I was saying this with greatest respect, but with no humility, that in this generation, we have not built as much as many other people have done. I think if you look at some of the things, yes, now there are all sorts of projects happening, roads going up, bridges and stuff like that. But we have not been responsible for building any of the new stock of housing, even a skyscraper. When was the last time that we saw a big building coming up in the city center? And what kind of banking institutions are coming up to support those kind of developments? And then that's where we need to go back to.
Absolutely, absolutely. Talk to me now about, I looked with great interest with what you're doing with City Hopper, which is a service that's so badly required. Domestic remittances in US dollars. I don't know whether the statutory instrument will allow you to continue doing that. Talk to me about those kind of sexy projects that you're working on right now that involve technology at BancABC.
Again, City Hopper, something that we developed entirely or internally with the team at BancABC, and it's something that I believe is one of the greatest products that we have done in the last couple of months. And I'll tell you why. It's a very, very simple service. What we identified, like you said, is yes, we have international remittance, but what do you do when the money is here? Because we are now becoming a dollarized economy, and our banking sector has probably not developed enough for it to absorb that kind of US dollar transactions that we are doing. So what do you do when you want to send money to your grandmother somewhere in Mutare or in Bulawayo? So get into a TM supermarket here, send it to anywhere where there's a closest facility to us. No brainer. But it has been so groundbreaking, Trevor, and I can tell you that 1 in 3 of people who are walking into our branch are actually working to do a City Hopper transaction. And I think it has exceeded our expectation. We actually didn't realize that it was that big. Trevor, we have about 8 other international remittance companies, quite a lot of them who are putting in money. But I can tell you the kind of volumes that we are registering on City Hopper internally is probably greater than all the other 8 combined. It's something that is really exceeded our expectation.
Any other products that you're looking at?
Yes. So you recall at the beginning of lockdown last year in March, and in fact I joined BancABC just a few months after lockdown, actually, after March. So one of the things that we identified is that we needed to make sure that our model mutated as quickly as possible to the lockdown effect. So we introduced a service called Branch X, which is our first virtual branch where you didn't need to visit any of our branches. In fact, you could do all your transactions by calling an agent, either through any of the platforms that we have, and the transactions will be done for you. We actually were invited by the Visa team in South Africa to do a demo of our Branch X model, because it is something that I believe was quite groundbreaking, and also kind of responded to the challenges that we are facing. We also introduced, if you recall, something that we call Dial a Visa. What we were trying to do is really just to respond to some of the challenges that we are facing as far as lockdowns are concerned, and the reduction in physical touch, because people wanted a platform or a service where they could reduce their physical appearance within a branch. And those services have proved quite successful for us. And again, what we're simply doing was to respond to what we're seeing in the economy and in the environment.
Talk to me about, you're doing interesting stuff. How is the situation with talent, finding the right talent? Point number 1. Point number 2, how you do digital banking in an environment where bandwidth is a problem, internet availability is a problem. Speak to me about those issues, talent and technology.
I think that the first one, there is a lot of talent in Zim, and I can tell you that for the 2 financial institutions that I've had the privilege of leading here, I've never had to rely on external talent. In fact, all the things that we have done at Stewart Bank or at BancABC, almost 95% of them are actually developed locally, or not locally, but actually internally.
In the bank.
Within the bank. And I believe that for you to have agility, you need to make sure that you have as many young people who are not afraid to experiment, and empower them. Empower them to make the difference, empower them to dream a little bit big. And I say this again with no apology, that sometimes people use experience as an excuse for incompetence, right? And for us not to move forward.
Yeah.
If you're going to challenge yourself, you need to challenge yourself with people who are different from you, people who are new, who are fresh, people who are young, people who are daring, and people who are not afraid to make mistakes. So if you have those people, whether they are tech-based, whether they are just strategists, or people who are observant, because innovation is about observation. It's about going to South Africa, seeing a product that works, bringing it here, and then contextualizing it to your local market. If you have people who are daring enough to do so, and do not use their experience and say, no, this won't work. I've done banking 20 years in this way, so you're not going to challenge convention. So you need people like that. So I think talent is ubiquitous. There is a lot of good talent here.
That's good to hear.
Yes, sometimes you then complement it with international best practice, but I believe that there is a lot of talent. Your second question was on
technology, internet, bandwidth, and digital banking.
Trevor, I think that, and I'll go back to what I said to you before, that technology is something that has to be relevant to the market that you're operating in. Bandwidth is an issue, but let me ask you a question. How many people are on smartphones in the country? Oof. It's a fraction of the entire population. I'm sure the stats will tell you maybe about 37%, less than 40% definitely. The rest of the people are on feature phones. So if you're going to innovate,
I see.
Bandwidth is not your problem. It's just really making sure that you are introducing solutions that are relevant to the market that you are targeting. That's why you see that the products that we do and the services that we do has to make sure it have to reach as many people with the kind of technology that you're looking for. Whether it's Kwenga, it's Branch X, whether it's City Hopper, you need to make sure that you are innovating.
That's where the market is.
That's where the market is. Zimbabwe is a dollar economy. It's not yes, it's a smartphone economy, but if you have 20% of a mobile market of, say, 10 million. That is, you're literally looking at a fraction of the entire people who are connected. So if you offer a product that's going to target 200,000 people or 300,000 people, you're going to fail. You need to have a product that can target 10 million people, and those 10 million people might not necessarily be bothered by bandwidth. They might be bothered by the fact that they can send money on a USSD platform. So technology, I believe that we have all the necessary technology that we need here. Yes, we have challenges. Yes, data is expensive. Totally appreciate that. And I believe that there are also other things that we are learning from other countries. Kenya, South Africa, and Rwanda, for example. So there's a lot of learning that is across Africa, which I believe that has been coming into Zimbabwe for the benefit of everybody.
Let me take you to a whole different issue right now. How are sanctions affecting your clients and BancABC?
Incredibly so, and I think sanctions are
break it down for us.
Are really sad, and I'm going to talk as a banker and not necessarily as anything else. One of the things that we have faced as challenges is opening what we call corresponding banking relationships, with because some of the currencies that we use, just to break it down into its simplest form, is the US dollars, right? US dollar transactions or rand transactions or pound transactions. I need a friendly bank somewhere in another country, somewhere, to clear those transactions for me, because I am not an original US dollar market, as you know. So corresponding banking licenses have been extremely difficult for us to open, because every country always, or rather every country that we've kind of been in partnership with, has been extremely afraid of doing business with Zimbabwe. One, because sanctions, as you know, originated from the US, and the US is the US dollar clearing market. So they're going to put onerous requirements for those countries that are doing US dollar clearing. So we've had quite a number of our corresponding banking relationships closed. And it's also been very, very hard for us to open new ones. The ones that we have been opening actually in markets which are secondary markets, Turkey being one of them. I remember traveling to Turkey to try and convince one small boutique bank for them not to close our account, because that was the only account that we could use to do US dollar clearing. A simple example is Visa. So Visa card, right? Everybody here uses a Visa card when they go to South Africa. For me to clear those Visa transactions, I need a bank somewhere that routes the transactions. If that avenue is closed, you cannot get money into the country directly into your account. And another example I'll give you is that the transactions become extremely expensive if you are using fringe financial institutions. There's one institution.
There's a price to pay
There's
for
a price
the service
to pay.
because they know you're desperate.
Absolutely. And I remember one client that got extremely mad at us because they sent $100 through their foreign bank account into their account in Zimbabwe. $100. The fees on that $100 were $40. $40. They received $60 into their account. Would you be happy with an arrangement like that? But that is the cost of sanctions, that it makes the entire financial ecosystem extremely expensive because you are not in the mainstream market. You are using financial institutions that are going to charge you a margin, a premium, because they're taking a risk on you. And I know that there are many, many other examples of restrictions that you have on trade, in that there are institutions that can't do business with us because they are on the sanctions.
Any other direct impact on sanctions on your clients and the bank, apart from correspondence banks?
I think correspondence banks and the cost, and also just generally remittance. Remittance as a general is, as you know, crossed over the $1 billion mark for this country in the past year, according to the statistics from the central bank. But a lot of corresponding banking institutions do not like remittances. So if we have that avenue being closed again, as it is in many, many instances, we're going to run out of...
Why don't you like remittances? Help me understand that.
Because, remittances is almost edgy. Remittances are popular in what countries? You don't see people doing remittances to the US, do you?
No.
Because the market works. So you see a lot of remittances going into usually underdeveloped markets because there's a lot of poverty. But there is a thin line between remittance and money laundering, right? So they look at it as a channel that can be utilized for money laundering, but we look at it as a channel for survival. So for us, remittance is the lifeblood of this country, because if you have $1 billion coming into the country, surpassing FDI, that is a real source of development funding for this country, whether it's going for consumption or not. So those are some of the channels that are kind of throttled by some of the scrutiny that we are seeing as far as sanctions are concerned.
You're not a lawyer, but I have to ask you this. The statutory instrument 1616127, what have you digested the implications? What's your assessment?
We are a very funny market. Let me put it that way. And my assessment is as a banking CEO, we are operating in a market which is very, very dichotomous. And in our thinking process is that we tend to think with the hindsight of history. So we reflect on any legislation that has been put on the table with the hindsight of the fact that I lost my money in 2003 or in whatever age that. And then we tend to think, what is the intention behind this statutory instrument? Whether it's intended for your good or for your bad, you are going to make your own plan.
Yeah.
And I think we
jump around.
Absolutely. And I think Trevor, you and I know that we're not necessarily a rationalist in as far as our interpretation of the economy of this country is concerned. The forex market is one big example. Let's start there, and then we can end with the SI. The forex market is probably, in my view, one of the best things that has led to stability in as far as the foreign currency market is concerned. Is it perfect? No, it's not perfect. It's got its shortfalls. What do we have in place of that? The black market. So we almost have to choose between two devils, right? Something that is working and making you and I as business people wake up with some sort of stability, and also planning of our businesses, because we know that there's predictability in the rate, and also because we know, yes, we won't get the money all the time on the forex exchange, but we'll get it sometime, and then it allows us to plan. If you then bring in the new statutory instrument, perhaps the idea or the ideology around it is to make sure that you are stabilizing the pricing around the official rate, right? And that all the economic actors are rallying around the official rate. But in our rationalizing of what we believe is good or bad for us, we are looking at where is the actual price of a commodity. And do I price it at what I'm being told is the correct price, or do I price it at where I believe that is the real value of the thing? Where does it go back to? Confidence. This is all about confidence. So we are going to see a little bit of instability in the next couple of weeks, and I believe we've already seen it.
Yeah.
But at some point we're going to find an equilibrium in which we always do, where we are going to find our way and doing business, perhaps in the best way that we can. Is it going to be ultimately good for the country? I think that is for the people who drafted it and for those who are behind it. But I think you and I, what we need is stability.
Absolutely.
That's all we need. Whether it's through a statutory instrument or through rationalism of us as economic actors, we all benefit from an economy that is stable. We all benefit as businesses and as individuals in the street, because we are all contributing to building an economy that is strong.
Tell me, Lance, Mambondiani, that's a very rare surname. Where were you born?
I was born in Dora Pindo. So actually, no, I was not born in Dora Pindo. I was born in Sakuba General Hospital, originally from Manyika, wise men from the east. But like you said, my surname, it's not a lot of people carry the surname, actually. There's actually a small village in Dora Pindo that is called Mambondiani. And as I was equipping earlier, Shkaramba, so see you, I'll just go and become, I'll go and become an arbiter of goats and cattle and be a chief. But I'm extremely proud of the surname. I have not always been proud of my surname. I grew up being teased, as I said before, with children saying, so do you put a question mark at the end of your surname or something like that? But I grew up to own the destiny in my surname, and I'm extremely proud of my heritage and of where I come from.
And your formative years, mom and dad, the impact that they had on you as you grew up?
My grandmother more. My grandmother more.
And what aspect of grandmother shaped you?
My matriarchal grandmother. But I grew up, as I said, in Mutare in my formative years. And my grandmother, pretty much the matriarch of the family, and I did most of the heavy lifting. Incredible entrepreneur in the sense of the word at that time. In that she had a vegetable store, she had a tuck shop, she would sell chingwa, she would sell all sorts of fruits and stuff like that. And that's where I learned the art of grit, hard work, and really just waking up and never say never, never letting anything to get you down. She got through 8 of her children through school. That was an incredible achievement for me, including us. Wow. As grandchildren. And I think she was probably one of my early mentors. And I was looking at her, I said, if she can do it, why can't I? As I always say, I think if you look at something different, really, and if you want to be successful, that hunger of provision and that hunger of wanting to do different for those who are around you is something that I learned from my grandmother.
Are you comfortable with your success now?
No, I'll repeat and I say this because not because I want to dodge the question, but because I absolutely believe in it. I believe that all of us are called to be significant, Trevor, and I believe that you've been significant in your area. You've been significant in influencing the media space in this country, and I think that is what matters. And I was saying to a journalist who asked me this question before, and I think success is about an individual and significance is about others. And I really believe that if we are going to make a difference to our jobs, what we are called to do, our country, we have to be significant. We just have to contribute to something that is greater than us as individuals and through our successes. I can only drive one car. I can only live in one house. I don't necessarily want to, have material success or all this success or being called anything. I don't want it to be about me. I want it to be about others. I want to make sure that I'm contributing just that one little bit, whether it's in my calling in banking, or because I've contributed to innovation in Africa across banking or something like that. That is what I believe that is more important. Am I comfortable with that bit? Definitely not. And I believe that there is a lot more that you and I can do to change the narrative, particularly of this country.
Fantastic. Lance, we love books on this show, and we'll ask you please share the 3 books that have had huge impact on you.
Huge impact on me. The first one that I read when I was a Stewart Bank is How to Become a CEO. So
you needed that, eh?
How to Become a CEO was one of the really important books that.
Who wrote that book? Sorry, Lance.
I cannot remember the author really, and the other books that I've been reading right now is. In banking, Bank 1.0, and the other one is Bank 2.0 and 3.0 actually.
Wow.
These are actually books on banking innovation across Africa, and I'd absolutely love to devour all of them. John Maxwell, I'm reading a book on leadership from John Maxwell, and my assistant gave me it gave me the book actually on leadership, and that's actually what I'm reading right now. Leadership Principles of John Maxwell.
Lance, very inspirational listening to you. You've had, I think you found your purpose, eh? I think you found your purpose.
Thank you very much, and I'm just glad to be here and glad to be contributing the least that I can to my generation.
Thank you, thank you. Allow me, Lance, to tend to our viewers who are in Zimbabwe, on the continent, all over the diaspora. Thank you for making this show the success that it has become. To ensure that you don't miss out on any of these shows, we invite you to click on this red button so that 7 a.m. every Monday, 7 a.m. Central African time, you get an alert when we have one of these quality conversations. Thank you so much for watching. Until next time, cheers to you all.